What about Payday and other high-rate internet lenders? We see them all over the place. We're deluged with their advertisements. In the absence of the banks not lending for the last several years, or not lending very much, many borrowers, both companies and individuals, have been driven to these lenders. People who ordinarily would not pay those extortionate rates of many thousands of percent. It's said that the thousands of percent APR doesn't matter because the loans are very short term. But what we don't have is rollover data from these companies. By that I mean statistics as to how many borrowers renew their loans and for how long. The American payday loan industry has come over here in droves. To them, it's the Wild West. It's the California gold rush. Interest rates of many thousands of percent, light regulation compared to the United States. More of them are arriving every day. Many such companies are making things worse, preying on the poorest, and also now on those people who normally would be good borrowers if they could get money from the banks and the finance houses that the banks used to fund. Some payday lenders tell me that they actually are aghast at the doctors and lawyers, other professional people who come to borrow from them now, having maxed out, as they call it, on 4 or 5 payday loan companies after they've done the same thing on their credit cards. Something must be done. A lot of people like me, with the desire and the experience to do something, want to try to fix this. Maybe it's not the fault of the payday lenders that the banks couldn't serve their customers who now must come to them. But certainly in terms of the hugely incremental growth in their business, I believe they should perhaps consider treating it differently, on a voluntary basis. Perhaps they could have a lower blended interest rate between their old business historically and the new business. There's always been a place for payday lenders, there always will be, but they shouldn't profit so damagingly from the failure of the banks to lend and the new influx of business they've had over the last couple of years. Perhaps a voluntary code of conduct and operations should be adopted before the government is forced to step in with some sort of legislation. The Office of Fair Trading has already started an investigation into this area. How effective that will be, no one knows. But payday lenders can easily put together a voluntary code. Someone has to do something. Before the credit crunch, 15% of the British public were subprime, credit challenged. That figure today is said to be over 35%. That's no longer a swing vote. That's a massive segment of the British public, and every political party should be paying attention to that, which they are. The payday and internet lenders, the high-rate lenders, need to do something because the amount of debt being layered on to the British public in substitution for bank and finance company lending could delay recovery for years, if not decades. These issues are just a taste of what will be featuring in the campaign for fair finance. Next time I'd like to deal with another large hidden elephant in the room, which is the non-bank banking sector that has been created by the present financial crisis. The banks aren't lending as they did, and many alternative investors, hedge funds and similar, have stepped in. They are largely unregulated. Most of them are offshore. And one wonders what kind of a mess will that create if there's no regulation and they can do pretty much as they want. Will that make things even worse? The government is aware of this. It's very concerning whilst they're trying to put out the fire in the banking sector. What is all this money doing and what consequences will we have from it? Again, there's no voluntary code. Should there be? Again, the government should set up committees to look into this and everybody work together to try to find some sort of humane social solution to this problem.